Have you ever felt like the big banks are taking advantage of you with the confusing fees, high interest rates, and lack of transparency? Well, my friends, you're not alone. The traditional banking system has been designed to keep you in the dark and profit off your hard-earned money. But what if I told you there's a freaky finance trick that could help you take control of your finances and keep more of your cash in your pocket? Stick around, because today, we're going to expose the secret that banks don't want you to know. Imagine a world where you're not nickel and dimmed by your bank at every turn. A world where you have complete control over your money and can make it work for you, instead of lining the pockets of greedy financial institutions. Sound too good to be true? Well, buckle up, because this freaky finance trick is about to blow your mind. It's a simple, legal, and surprisingly effective way to take back your financial power and keep more of your hard-earned cash. Part 1. The problem with traditional banking. Let's start by addressing the elephant in the room. The traditional banking system is rigged against you. From the moment you open a checking or savings account, you're bombarded with fees, charges, and interest rates that make it nearly impossible to get ahead financially. Think about it. Overdraft fees, monthly maintenance fees, ATM fees. The list goes on. And don't even get me started on the abysmal interest rates most banks offer on your savings. It's like they're actively discouraging you from saving money. But it gets worse. Have you ever tried to get a loan or a mortgage from a big bank? The process is a nightmare of paperwork, credit checks, and often, outrageous interest rates that keep you in debt for years, if not decades. Part 2. The freaky finance trick revealed. So, what's the solution to this financial madness? Enter the freaky finance trick: peer-to-peer lending and borrowing platforms. Now, I know what you're thinking. Lending and borrowing money from strangers on the internet. That sounds sketchy. But hear me out. Peer-to-peer platforms like LendingClub, Prosper, and Upstart have revolutionized the lending and borrowing game. They connect borrowers directly with investors, cutting out the middleman, aka the big banks, and their exorbitant fees. For borrowers, this means lower interest rates, more flexible terms, and a far more streamlined process than traditional bank loans. And for investors, it's an opportunity to earn higher returns on their money than they would with a typical savings account. But the real beauty of these platforms lies in their transparency and accessibility. Gone are the days of having to jump through hoops and beg for a loan from a faceless bank. With peer-to-peer lending, you have control over the terms, the interest rates, and the entire process. Part 3. How to get started. Okay, so you're intrigued by this freaky finance trick, but you're not sure where to start. Don't worry, I've got you covered. First, do your research. Check out reputable peer-to-peer lending platforms and read reviews from other users. Each platform has its own set of requirements and processes, so it's important to find the one that best fits your needs. Next, create an account and complete your profile. Be prepared to provide personal and financial information, as these platforms need to assess your creditworthiness and risk level. If you're a borrower, you'll need to submit a loan request, detailing the amount you need, the purpose of the loan, and your desired repayment terms. Investors will then review your request and decide whether to fund your loan, or a portion of it, based on your creditworthiness and the potential return. If you're an investor, you'll need to fund your account and set your investment criteria. This might include the amount you're willing to lend, the interest rates you're comfortable with, and the level of risk you're willing to take on. Once your loan is funded, or your investments are allocated, the platform will handle the rest. Payments will be automatically deducted from the borrower's account and distributed to investors, minus a small service fee. Part 4. The benefits and risks of peer-to-peer lending. Like any financial decision, peer-to-peer lending and borrowing comes with its share of benefits and risks. Let's break them down. Benefits. Lower interest rates for borrowers. Higher returns for investors. Increased transparency and accessibility. Flexible terms and repayment options. No physical branch or overhead costs. Risks. Default risk. Borrowers may fail to repay loans. Lack of regulation. Peer-to-peer platforms are not subject to the same regulations as banks. Potential for fraud or identity theft. Limited recourse in case of disputes or issues. It's important to weigh these factors carefully and make informed decisions based on your personal financial situation and risk tolerance. So, there you have it. The freaky finance trick that banks don't want you to know about. Peer-to-peer lending and borrowing platforms offer a unique opportunity to take control of your finances, bypass the traditional banking system, and potentially save, or earn, thousands of dollars in the process. But don't just take my word for it. Do your own research, explore the different platforms, and see if this freaky finance trick is right for you. And remember, knowledge is power. By understanding alternative financial options like peer-to-peer lending, you're taking the first step toward financial freedom and independence. So, what are you waiting for? Join the peer-to-peer lending revolution and start putting your money to work for you, not the big banks. Trust me, your future self, and your wallet, will thank you. If you found this video helpful, be sure to like, share, and subscribe for more mind-blowing financial tips and tricks. And as always, let me know your thoughts and experiences in the comments below. Until next time, keep your finances freaky.